I think there's going to be very, very few opportunities to get in to the short side. So I thought I'd take it and get in to the downside. I don't even know if I've got the best one, but I like the setup. So yeah, the way that the markets are looking, it still looks pretty heavy down here. We are at in fact, we are live on YouTube. So yeah, welcome to everyone.
I normally say happy days, but I think we're a long way from happy days at the moment, mate.
Oh, you absolutely are. Yeah, absolutely right. I think we are quite a long way from happy days. And it's interesting. I'm running a course later on for Actions to Wealth.
Yoga, mate.
Hey, John. And it kind of, I always kind of go back and look at when I'm doing these courses. I go back and figure out how I can explain what I need to explain in the most clear way, and it almost helps. And this is one of the reasons I really like teaching, because it helps you kind of recalibrate and get perspective again, and that's what we really need. Hey Kumar, how you doing, buddy? Yeah, we really need some perspective here. Now, I am short the banks, as I was saying. I'm short the banks from Friday, and there was a selling opportunity on Friday in the end. I was looking for a long in the FTSE, and I did get into a long in the FTSE, but I was looking for this weekly pivot. But by the time I'd seen kind of some of the price action around about this point, this area of resistance here, it was looking like a long was well and truly off the table. So I did come out of that, and I decided to short HSBC. I'm still quite keen on the food industry long, and I've also been reading something interesting about steel, about how steel has become a bit of a safe haven, and people are actually buying up steel and iron ore ultimately.
What's the mentality behind that, or the theory behind it?
I think the news out of China. Some of the headlines out of China is that they're quite positive about their situation, comparatively speaking, of course, that they're quite positive about their situation, that, like they've got a handle on it. And if I think about the economic factor that is China, that makes up China, then it kind of does drive me to believe that they will probably be better equipped than a capitalist society to deal with this, because the government basically do have their hand in everything. So where other countries are effectively adding all this stimulus, but will they see those returns in some respects? Because they are keeping companies afloat that could just pack up and leave the shores, at any point. I don't know, not sure why they would, but that could happen. But obviously that can't happen in China. So the model of the economy is I think is fairly resilient. So I'm wondering whether the reason that people are buying up steel is because they've got a belief in the potential building flurry that will take part in a year's time, not now, but in a year's time. And obviously people buy things way out in advance. So I'm wondering whether we might be seeing some upside in things like steel because of that. Obviously, we are in some respects having to react in the short term right now, because unless you were in at the start of this trend, which I think we all were to a greater and lesser degree, but closing down trades because of looking for a normal situation, which would be some sort of bounce, and then you get back in again. Well, that didn't happen. So all those closed trades effectively really were a missed opportunity. So
I'm in that boat.
I think most people are, mate. I mean, it was an unprecedented move, and it was, I think it took us all by surprise to a greater and lesser degree, and it did actually catch us on the hop. So
I'm not kicking myself in the butt though, because
me neither.
Taking a good profit. What's wrong with it?
Well, this is the thing. I suppose the thing is that you just have to kind of at this stage then work again. Whereas if you were in, your job would be done. You know what I mean? You'd be done by the year, for the end of the year. Right, the market has just opened up.
Let's go on holiday. Problem is, Ash, where are you going on holidays?
Well, this is some of the issue.
Backyard.
I think so, mate. I think that might be the only answer. It might be the only answer. So we are open up now. I'm just checking around my stocks here, and what have I got? Let's just check. Okay, this is looking okay. So, oh no, hold on a minute. Where's that? That's not even on there. I'll have to get that on there. Okay. All right, let me just tell you the situation. My goodness me, Carnival, which is
we discussed this last Thursday.
Yeah, it's a stock that supplies travel. It's in the travel industry. Now, I don't know if these numbers haven't caught up yet, but that's up 20%. I mean, what a jump that is.
Whoa.
I don't know what that's quite all about, but maybe we do see. Actually, banking stocks are doing pretty well as well so far out the gun. Now, I don't know whether this is caught up or not. It should have. Don't see too much in the way of price.
Sure, it's not upside down.
No, actually, no. I wonder, mate, whether we've got a limit down. These stocks aren't moving. I think we might have a limit down closed on some of the. Yeah. Okay. So
that happened in Aussie today. Yeah.
Yeah. No. Actually, my particular banking stock is in profit 2.5% for me. So it's actually down 2.5%, which is good because that's what I'm after. I've traded HSBC to the downside, so that's continuing to move at this particular stage. Some of the other stocks that I'm still interested in these supermarkets, but the price action doesn't seem to be moving. EasyJet is down by 4.5%. So maybe those numbers that I just said about Carnival aren't quite accurate, and I don't see that price moving at all. So I think we may well have a limit down with a gap in the FTSE. Interestingly, look at the FTSE, and we see a bottom here, a low here, and a low here. I'm not going to call it a bottom. That was a mispronunciation, sorry, because we don't know whether it's a bottom or not. But we have 3 lows here. We don't have indicators which suggest this is a bounce point, however, and we have a weekly and a daily pivot here. So this to me would suggest a potential selling opportunity if the market is able to pop up at all to those levels. So we're still looking for shorts here, in my opinion, mate. But we do have a bit of a limit down. Now, I tell you what I am interested in. I'm going to let you get to the pound, mate. Sorry, I've talked way too much. I just want to quickly say to everybody, can everybody prepare what they are looking for this week? Just post it up and we'll have a look through it, because really over the weekend you should be getting a watch list together so we can look through it together and get some ideas, okay? Literally just post in euro dollar, for example, short, and we'll have a look. Okay, Jeff, I'm going to pass to you, and we will deal with that, and then we'll look through some currencies together.
Roger D, I don't know if anybody traded the breakout trade on Friday. It doesn't look as though it would have done too good. I'll share screen. I didn't, of course, not in front of the chart. Should be. I really should be in front of the charts a lot more than I am at the moment, but with another business to run and in trying times, a bit of attention needs to be paid to that one.
Oh, mate, you're probably in the best area, really. You need to keep your mind off this market. I think is almost the best way to make money.
Yeah, look, I think I've lost focus of making money at the moment. I'm more focused on how to come out the other side of this, really.
Yeah,
I think it's more a matter of survival, frankly.
Yeah. I get that. I totally get that as well.
Anyway, let's face this trade, and we'll discuss that.
Sure.
Righto, guys. Those of you joining us for the first time, and Ash, if there's any questions, I can't see them. I can't, for some reason, see the YouTube feed, which is
no problem.
A bit weird. Okay, for those of you joining us for the first time, we trade each and every day a pound US dollar breakout trade, and it's a breakout of the previous 3 1-hour candles prior to London session open. I'm actually liking the look of this chart, I've got to say. I wouldn't mind placing a long here anyway, which I will do, but it's going to be in a dreadful place. We'll see. And in doing so, what we're attempting to do is take the range of the last 3 bars. In this case, it's very close to the range of the last bar, hourly chart that I'm talking about, and we'll place a long order 15 pips above the high of the range, which will be this bar here, and 10 pips below the low of the range will be our stop loss. So let's place that. We better go short first. We place both a long and a short, right? So we're trying to catch the breakout whichever way it goes. and we'll place the short in exactly the opposite numbers that I just gave you. So the short will be 10 pips below the low of the range. In this case, it's the low of this bar. And the stop loss will be 15 pips above the high of this bar. So let's place that. Now, I hasten to add that this is in beta test mode, guys, and do not place a substantial amount of money on this because we haven't proven it to be successful over time. Okay. So the first order will be a sell stop, and it will be 10 pips below the low of this bar. As I said, the low of this bar is at 1.1605. So the entry for the short and the stop loss for the long will be 1.1595. So we plunk that in there. And then we go up to our stop loss, which, as I said, will be 15 pips above the high of the range of the last 3 1-hour candles prior to London Open. This one, and this one. So the high is the high of that bar, and the level of that bar's high is 1.17139. Let's call that 1.1714. We'll add 15 pips to that, and the stop loss for the short will become 1.1729. There. Now remember those numbers because we'll be needing them very shortly. So it's about, what, 134 pips of stop loss on this breakout trade. Don't worry about the take profit. We'll deal with that in just a tick. So we'll place that order short, and there you can see the stop loss, but you can't see the entry. I don't know why that is, but there's the entry over here at not this level, but down here somewhere. It's not what I want to do. All right, so we just do that in reverse for the long. So let's place another order into the market. It will be a buy stop, and the entry will be 1.1729, I think, from my memory. And don't forget, I remind the elephants. And the stop loss, what was that elephant's number? Was 1.1595, if I'm not mistaken. Let me just check that. Can't see it. 1.1595, I think it was. But I will double check that because the elephant's left the room. Okay, let's place the order. There it is. Yeah, pretty bang on. And here's how we manage the trade. I'll let you know how we manage the trade before we get into it. So once we get triggered, if we get triggered long, we'll cancel the short order, number one, and then we will trail on a 15-minute chart. So I'll go through that with you in a sec. In fact, I'll do it now. Last Thursday, we got entered here into the market. Didn't trade on Friday. So we traded, I think it was about that level there somewhere. We traded the last 3 bars here prior to London session, and we got triggered short with this candle. And we went to a 15-minute chart. Hang on, just mark that so I know what we're doing. And the level's there. We went to a 15-minute chart as soon as we got triggered. And when we got triggered on this candle here. Our stop loss is up here somewhere, don't forget. And when we got 2 seller bars, so 2 black bars, if you like, on a 15-minute chart, the first 2 black bars together are here, 1, 2. We trailed our stop loss to there. Then we got 2 more seller bars in a row, so we trailed our stop loss to there. Then we got another 2 seller bars in a row, so we trailed our stop loss to there. Then we didn't get another 2 seller bars, so our stop loss has not been hit. Another 2 seller bars here, so we moved our stop loss to here. Another 2 seller bars here, moved our stop loss to here. another 2 seller bars here, moved our stop loss to here. And on it went. Another 2 there, another 2 there, another 2 there, another 2 there. When do we get taken out here? Can't even see it. We're on a 15-minute chat. This is getting ridiculous. We didn't go that far, guys. I can promise you we didn't go that far. I can't see where we got taken out, though. Maybe we did. Oh, okay, we did too. That's right. Yeah, we got a good result out of this. So we came right down to here, and our stop loss trailed to this point. Then we got a few buying bars, but didn't get taken out. 2 seller bars to here. Then 2 seller bars to here, and we didn't get taken out till the next day. That's right. And we got taken out there. So that's how you trail this. And with any luck at all, was I on Thursday? Maybe I was. With any luck at all, we'll get similar results to that often. And that's the whole idea of trading the breakout. So if we find a better way to trade that, of course, better way to manage it, we will do that. But at this point in time, the 15-minute chart trailing 2 bars seems to be okay. And we're going quite well using the last 3 one-hour candles of the pre-London session. As I said, Ash, I don't mind along here. It looks okay to me.
Yeah.
From here, take profit here. And if you want to just let it go, I don't know how far it can go. It doesn't really look like a W bottoming pattern, but there's every chance this could reverse. Why? There's a good question. I've got a few people telling me that the US dollar is about to fall into disrepute, if I can put it that way. So yeah, what do you think, pound, Ash?
The pound. Well, I was just looking at the pound versus gold actually, and I like gold to the upside against the pound. The pound is.
It's got to come good gold, hasn't it? Really, at
Yes.
some stage.
Yes, I think from an inflationary play. I mean, the thing with the pound, I think the movement in the pound has been a little bit surprising, but I don't think the government have handled this situation very well at all. And given that, you have to worry about the UK's economy, and if you think about the countries that if we are trading this as an event, then really we're going to be sort of like seeing, obviously the lack of dollars is making it a difficult thing to trade against. But if I think about the pound and the UK economy, I look at it against the euro because I don't really get what the attraction with the euro is. I don't understand the price action in the euro. I don't understand the euro pound upside.
Funny you should mention that, and I'll just interject quickly. That is the trade of my day today on our. And I shouldn't be leaking this information, but that's the trade of my day today on our 2-minute brief. Those of you who are interested in the 2-minute brief, that is a subscription thing that Ash and I do each and every day that we trade, and that's available through. Forgotten. Ash will put a link up shortly.
I'll put a link up right in now. Yeah.
So that's just a little tip out of school. That is the trade of my day, euro pound short, but I've got parameters around that, of course.
It takes me a little while to find this thing. Here we go. You got euro pound short with parameters. Yes. Okay. Well, and we've got we have got some ideas in the box. So let's get through those.
Yeah, you have to read them to me if they're to me. So I can't.
Yeah, no problem. Okay. So we've got looking at oil prices. John's looking at oil prices, so we'll look at that. PL's looking at the dollar yen, so we can look at that, and we'll discuss that in a moment. That's a really difficult trade, in my opinion. Currency pairs, not sure on with John. Kumar's looking at the Kiwi Swissy. Hey Helen, how are you doing? Good to have you in the room. After all, I'm looking at steel. Yeah, I like the steel play. Okay, so we're looking at the dollar yen. We're looking at the Kiwi Swiss, and we are looking at oil, mate. So,
God, you're talking about crosses I don't trade in this session, but Ash, give you, because I can't go to my other charts.
no problem, mate. No problem. Let's talk about. Let's get to oil first, because it is a
yeah, marvelous, isn't it?
Well, I mean,
I love PB's theory on this yesterday. I thought it was a great analysis of what could happen.
Oh, I didn't hear the analysis on that. So
I'll give it to you.
Yeah, maybe tell me after. Don't sully my view just in case it's different.
No, I won't.
Okay, so right, here we go. Now, my view on oil is that it's a pig, and I don't know why anybody would buy an oil. I know I get the thing about oil is I get the price. You know, if we look at this on a monthly chart, then I get the factor for a potential price bounce here, because we've got this low here, and we've got if we extrapolate to the right, then we do have the bounce line. Now it has bounced at that point, so I would understand anybody looking at this purely from price and going, "Oh, are you still hearing me? Oh, that's okay."
Yeah, mate, I can hear.
Yeah, so I guess my screen froze up just momentarily there. I thought I was going to get cut off. Okay, so you know, I get the potential for this to bounce on price, but I've got to ask myself why. You know, it's looking at this on a shorter term time frame. We did see. Let's have a look at this on the daily. We did see a little bit of price action here that you know, it did bounce away from the price. It's gapped down again this morning, and it's right back at those lows again. And again, it will probably you know, try and form a bottom down here. But again, you know, I've got to ask myself, why is it going to rally from this particular point? And at this stage, I don't have it. So my particular thoughts on oil are: price, yes. If you are bullish, is this a buy? In my opinion, no. And the reason I would say that is that there's no such thing as too cheap, and there's no such thing as too expensive. We use those terms, but the truth is that there's no realistic reason for anything to either rally or dive just because the price is as low as it's been before. Because things can go to zero, and the thing is with oil, you know, there's still this OPEC problem that is out there. There's still this big furore going on with the Saudi Arabians and the Russians, and the Americans are involved in that too. You've also got the climate change issue, and now you've also got the business issue. You know, who's buying oil, because transport certainly isn't. So there's a massive glut of supply out there and no demand. So just from that factor alone, I don't see why. I don't have a why that oil would buy up. All I have is a potential price point where it could bounce from, and a double bottom. That to me is not enough to get me interested in a long in oil. Would I be short here? Probably not. You know, I think the short's probably just as dangerous as the long. But I suppose my view on it is that if there is a long in play, which, you know, I think everybody would agree that that would be what they are looking for here, you know, to try and get the long in oil. If there is a long in play, then I would want to see this happen and get through this point before I was interested in anything. I know that's the wrong color, but let's say we'd have a bar kind of going like that, and only on pullbacks. You know, if there was a pullback back to the trend line and this horizontal level, then I'd be looking to try and get into oil to the upside then. But until I saw that, I'm not interested. You know, all this double bottom really is telling me is that there's a chance that it could hold. But until it has a reason to hold, then I'm not too convinced that it's the safe way to try and take on oil. So I'd be looking at a break of 28, and if I've got a break and a hold and a return to 28 and a hold, then I'd be looking at a long in oil. Otherwise, I'd be sitting on the sidelines with that one.
Yeah, look, I'm on your side because we're technicians, and that's what we do.
Yeah.
There's another way to look at this, and I would never have thought of this. But wow, what an interesting way to look at markets. And I don't, and I don't know that you do either, from a point of view of, let's say, and we don't know for sure, but it's deemed to be the cost of producing oil, mid $40 mark or thereabouts, right?
Yeah.
And at some stage that must return there. Of course, when that happens, nobody knows. But if you consider that the price of oil can't go to zero, they won't be shipping it around the world and giving it away. That's pretty much a given, I guess.
Yeah.
The pundits would tell you that $19 is the magic number, why, for whatever reason, I don't know. But that seems to be the magic number. Maybe it's a technical reason. I haven't had a look at the charts. I don't trade oil. But they're giving that $19 handle as probably as low as it can go. That's like waving a red flag in front of a bull, as far as I'm concerned.
Yeah.
And, let's test 15 if that's the case. But if you take that into consideration, and you're willing to, let's say, speculate that oil will go back at some stage to 45, 48 cost of production, or the so-called cost of production around the world, then does buying at let's say $25, or let's say $28 with a $10 risk, or let's say a $13 risk, if you're buying at $28, and your $13 risk is getting you a stop loss at $15, you still got 20, I can't remember what the number I just said. Did I say 25 or 28? Whatever I said. You've still got $20 odd,
Yeah.
which is a 1 to 1.5 or whatever. And you get it wrong, and they go below $15. This is PB's synopsis, right?
Yeah.
Then you get back in again at whatever, $25, and your stop loss goes to $10, or whatever the case may be. That gives you 15 versus 30 odd. You're getting a fair reward to risk as it continues to go down.
Yes.
Now, I don't trade like that. You don't trade like that. But I think it's a wonderful exercise in logistics and how different people look at markets differently. And I totally get the logic. The logic makes perfect sense to me. What doesn't make sense to me is the potential for going down to $1 or $5. I don't know. It's not the way I trade. So I can't quite get my head how to trade that.
I completely hear you, actually, and I think Paul's theory on that. He told me that, actually, thinking about it, and I like it too. And the one way that you could convince me that that you could get some money in this, which I know that he's done, is if you go in at a quarter of what you would normally go in. Because if
you're not risking the house on it. No,
you're not risking the house on it. You literally want, if it's going to be in your portfolio, you want it in your portfolio that if it gets stopped out, it's not going to affect your profit line. It's just very, very speculative.
With every trade you take, of course.
Well, and unless you have the setup, obviously if your setups are screaming at you that you want to go all in, then obviously that's where you start to go, this is my perfect setup, and this is where, because if we don't and really this is a lesson for everybody, if we don't play with our money in the way that we are sometimes more confident on a trade, so we must put more money in, and sometimes very speculative on a trade, so we cut the risk right back, then we are not effectively trading with our beliefs. Otherwise, what's the point in having a setup? If you're just going to purely trade off levels, if you like, maybe that's your setup, which is a completely different argument. But if you're going to completely trade off levels and an opinion about why a level should hold, then as I say, what's the point in having a trade setup? What's the point in in designing a strategy which gives you indicators upper and lower price points, Fibonacci's, trend lines. What's the point in doing all that if you're not going to, when you see all the stars line up, if you're not going to load in on those trades and speculate on the others? You know, I think the money management on that makes no sense to me whatsoever. So so that's where I would say that if you are kind of trading something like this, then you'd go in really light. You know, you go in at 0.25% or even less potentially. I don't know how you feel about that, Jeff, but that's my personal
absolutely
thought.
Absolutely the same. You know, if you're not confident about a trade setup, then yep, 0.25%. If you are confident about a trade setup, you're super confident about a trade setup for, you know, 5, 6, 7 reasons, then, you know, I'm not going to name a figure because everybody has their upper risk limit.
Yeah. But it's higher than 0.25%, right? I mean,
absolutely.
And I suppose this is the thing. This is where your journal really gets important, doesn't it? Because you need to know that your strategy is watertight to the point that your strategy setups should be winning 2 to 3 to 1 at least 70% of the time. And if they're not, then you're not going to load in. You know, you don't have a strategy you're confident with. And the only way you get confident is by seeing the numbers in front of you and going, like, you know, it's like the pound trade, isn't it? You know now what the numbers are with the pound. We've been doing it now for a few months. You know what the percentage of winners are with the pound. And it gives you a pretty clear view of how likely it is you are to make money out of it. And it does actually then shape the decision of how much money that is worth risking on that trade. And really, that's the only way we can do it. We can't, you know, stick our finger in the air and go, well, this is a good setup, so I'm going to load in. You know, how do you know it's a good setup? Have you done the work on that setup to understand that it makes money 70% of the time? Now, I don't mean that the setup works 70% of the time. I mean that the 2 to 3 to 1s that you make on more than make up for the 1% that you lose on, whichever figures you're going to put into it, by more than 50%. But really, you should be looking in the 70% region. You want to be really confident, when you go into a trade, that it's going to work out. And that's where you can put more money on. But if you don't trade things like we're looking at with oil, after having a theory with any money whatsoever, then you're also really taking the risk that that you're going to get bored. You know, you're going to get twitchy and not take really good trades. Because the truth is with this one, if the really good setup means that we break this level and you've got in down here at 1/3 of a percent, let's say, by the time it gets up here, you might have made that third, or you might have even made a 1% by that point, which means that the next trade becomes much less risky because you might only be risking 0.5% because of where your profit has been taken on a 1% trade. So so that's the other sort of aspect of this. When you're taking these trades which aren't fully set up and you're going in at a diminished amount of money, you need to understand how to play them, and money management becomes really important.
Yeah, if you look at a market that's trending and you want to trade double bottoms, you can very easily go broke trying to pick those double bottoms. Wait until the next signal. It's the next one that counts. It's not the double bottom. Use the double bottom by all means.
Yeah.
But use it in context with what happens next.
Yeah.
That would be my advice. Because there's lots of double bottoms in a trend that don't work.
That's right, mate. And you know what? I also it's a bit like volume, isn't it? You know, the volume really confuses people. And it's something I talk about when I do my course. You know, people think that a spike in volume is a clear signal that you should be getting into a trade, but that's not the case. You have to understand what that volume means, and also you want to see it after it's happened and make a judgment on what's the volume telling you at a specific price point, rather than trying to jump in just because there's a whole bunch of volume around that area. Right, let's have a look at some of these others as well, mate, because we were talking about some other trades. My goodness, it's already 8:30 now.
Where does that time go?
I don't know, mate. Hot air just escapes in hot air. Dollar yen.
Oh, yeah, okay.
Dollar yen. Now,
What do you got?
I tell you what, the reason I don't like dollar yen is because the yen's the safe haven that we kind of need in an environment like this, and there's a shortage of dollars, so that becomes a safe haven. So even though I like the dollar separately and I like the yen separately for an up move, I think against each other they become very, very difficult. A very, very difficult play. I mean, you can look at this chart and say the dollar yen is in an uptrend. And
you liked this last week. You really liked the candle.
I did like the candle. But I tell you what, it was last week. It was the monthly that I was really interested in, and we're not there yet. And I suppose that's my issue with it right now. That we haven't completed this, and there's so much bouncing around going on. Does this end up being just a massive doji, or does it actually end up being a genuinely bullish bar? Because right now we're kind of we're in the midst of creating it. And if we look at the let's look at where price action is. Let's look at where the price on this is. And after talking about cheap and expensive, cheap and expensive.
Well, you know what my market structure is on that, and you've got the top of it there right now.
This one here. Yeah, might even be there.
That's where it is for me.
Yeah, might even be there, and I'd agree with that, because you got a touch and then 2 touches here.
And you've got exactly the same on the bottom side. So you've got a clear descending channel as far as I can ascertain. And
yes, I agree with that,
really mate. It's respecting that very, very well.
I agree with that.
Guess what my bias is?
Yeah, I'd agree with it. So if we're looking at a bias for short, and this is a question to the room, which I will be quiet after I've asked it. If we're looking at this longer term time frame and it's suggesting a short, what are we going to do here? Starmax, I am short banks. I'm not short the FTSE itself. I am short on the banks. So I've traded the FTSE, but I've decided to trade something that I think is probably the weakest. Financials, I think, are the weakest sector in there. So I'm trading the weakest sector instead. And it's working out pretty well right now. Not safe yet. I haven't moved my stop to break even as yet. So we're about 1% up on the trade. Yes. So what do we do? This is the question to the room. What do we do when we have a short bias because of this longer term time frame, and we have a long bias on the shorter term time frame, which is the 4 hour? When we look at this 4 hour, surely our bias has to be long. So what do we do here? I'm just talking about price action. I'm not talking about setups and what your indicators are telling you at all. I'm just talking about price action. The price action suggests that we are at a bit of a lofty spot when we look at the longer term time frames. The short term time frame says buy signal, buy signal. Look at this, double top, but double bottom really, and potentially a little hammer forming here. Let's have a look at this on an hourly chart. Doesn't look so good there. The 15 is suggesting that we might well have broken through a little level here. Let's have a look. No, not there yet.
Yeah, you're probably coming off the bottom of a range as well, and put in a higher low. And
little inverted head and shoulders on the 15.
Yeah, it's telling you bullish there.
It's telling us bullish. So
it's telling you buy.
Alexis is in. Good morning, Alexis. I guess it's not morning where you are, but salutations. Yes. Oh gosh. Okay, that was to do this. Okay, any answers? We got any answers? Jump in, LT. Jump in where?
Get in. Right.
Get in.
Doesn't matter. Just get in.
Helen, I will. Yeah, Alexa has explained the double bottom, and I will get to it for you in a moment as well. Okay, we got no answers, Jeff. What do we do here? Sell the. Okay, LT. LT's got to sell the US dollar. Come on, we want some more answers than this.
It's a 4-letter word.
It's a 4-letter word, is it?
Yeah.
Is that how you spend your time while waiting for charts?
It's better than Rachmaninoff.
So we got one answer. John saying sell the dollar. You sold this morning. Okay. Okay. All right. Well, you know, I don't know any reasons for selling, so I'm not going to. I've only got two answers, but I'm going to give you the answer. So we got Kumar saying sell. Okay. Right then. So now I'm gonna have to ask this in a roundabout way. So we got the monthly chart is saying for us that we are at a level of resistance. Is the monthly chart in a downtrend? I think that's questionable. So does that say sell? No, it doesn't. The 4-hour chart is saying buy effectively because we got a trend to the upside. So the answer that I was looking for, and I'm hoping you'd agree with this, Jeff, is that we wait and we put this on our watch list.
That's the 4-letter word.
That's the 4-letter word. We wait because we don't have a downtrend. Why would we sell this? We got a hold here and a hold here potentially, which could drag us back to the highs. So why would we be selling this? The only time that we can sell this, according to the 4-hour chart, is if it breaks that low. And what I'd really, you know, what'd be great is if it kind of like messed around up here for a little while longer and then decided to bounce and then break the low with the trend line. And then we've really got a good trade. So we can start looking at here. So what we should be looking at is waiting on this, but putting it on our watch list. If we are interested in this in the shorts, then and this is just for technical reasons. I don't know what the fundamental reason would be for a short necessarily, but if there's a technical reason that we're looking for a short, then we don't have a setup to tell us to go short. We've still got this series. There's a high, there's a low. This is cycling on the 4-hour chart to the upside, not cycling to the downside. You know, that's where it's going right now. So what we're saying is that it could still keep going. We could still be right about the short, but get in so early with a stop loss, I don't know where, that we end up getting fed up with this, and then eventually it goes all the way back down here again. So we're not going to do anything at this stage. What we're doing at this stage is waiting and putting it on our watch list as a potential shorting opportunity.
Here. Absolutely, all the same. And that nice little range that you've put in there between maybe 109.90, 109.80 and 111.20 is exactly where I'd be looking to trade on the 30-minute chart, up and down until it breaks.
There we go. So we have levels as well that we'd want to look at. So so that's what we're looking to do. Okay. So the next one was now LT. I'm not dissuading you from your trade because I don't know if you had a setup, and if you haven't got a setup, then you want to ask yourself why you traded it. If you did have a setup, then it's all good, and especially if you sold it, because I think it is at a level of resistance. But I wouldn't be trading it yet personally. I think it's a bit early. Now the other one we had, Jeff, was the Kiwi. Who is looking at? Oh, and we need to get to Helen's double bottom, so let's not forget that. Oh, Helen. Okay, let's answer both your questions. Kiwi Swissy. Now the double bottom. Let's get to that first. The double bottom is a price point where we are effectively seeing support. So if we look on chart, and it is an indication that we have accumulation. And when I say accumulation, I mean buying. We have buying in the area, strong buying in the area, and strong buying at a price. So what it does is it gives us a price. So let's see if we can find one here. Now this would have qualified as a double bottom here. Now, as Alexis says, it kind of it can end up looking like a bottoming, a W. Pattern. So let's have a look.
The reversal of an M.
The reverse of an M, which is a topping pattern, which is a double top.
But as we just said, when the market's trending, there are a lot of double bottoms that get busted. And
that's right. That's right. So we come down here, and this is one low here. So when it comes down here and it bounces away, that qualifies as a double bottom, and you can see the W bottom, but and then bang. That's what you're looking for with a double bottom. Now, it doesn't mean it's going to work out like that. What it would normally do not normally, yeah, it is normal actually. But what's a regular situation when you see this is that price will at least get back to what would be called the neckline, and the neckline is the high end of the W, if you like. So you'd be looking to take profit here, and then see if it goes through, comes back and tests to add a little bit more in your trade to see if you actually get a trend to the upside.
There's your best reversal trade right there.
Yes, yeah, because this is really bullish. If it breaks out of this neckline where it's found resistance, then it becomes really bullish, and it really does kind of like give you a really good reason to get in. And when you are looking to measure your double bottom, there's different theories on this, but really you go from your neckline to the low end of the pattern, and you measure up to get a price point for a target. So the price target on the pound in this scenario, and you'd want it in conjunction with a price point on the chart, but that would have probably been, so it's a badly drawn line, but it would have been this price point here, because it gets us pretty close into that area. So if I can draw that a bit straighter, there we go. So that's what we'd be looking at with a double bottom. Now this one's failed, and if it fails, it's incredibly concerning. Well, it hasn't failed. Sorry, that's wrong. This one hasn't yet failed, and I'll tell you the reason why it hasn't failed is because the current bar we are looking at has not yet finished. What we're looking at is a monthly chart, and the monthly chart is still a monthly bar, sorry, and the monthly bar is still in process of is still going on. So now this is another one for the watch list, really, because if this double bottom is to play out, I can't grab that. I'm going to have to get a new line. If the double bottom is to give us not play out, it's not played out, it's failed. But if the double bottom is to give us a price point, then we're really looking for the monthly chart to get the monthly bar, sorry, the price of the monthly to get back up here and then bounce away to give us what would be a triple bottom. And these could go on forever. It could be a fifth bottom or a sixth bottom. It could keep going. All it's telling us is that there is continuing. There are buyers down here, and we could take a speculative trade where you put your stops at this stage would have to be under this bar, but the same could happen again. Could come down next month, trade lower still, but end up closing here. So really, the way I'd be looking at something like this is a hint that we might well be forming an area could hold, and we might see some accumulation down here. But the time that we're going to get confident that the trend is really going to be starting is a break of here. Now we would have looked at the neckline before, but this pattern has now changed. So now I'd want to see it break the trend line, and I'd want to see it break through these highs because it just didn't get high enough. So if it breaks out here, this is resistance. Breaks out here, then we can start looking for longs, and it's now a different pattern. It becomes more of a descending triangle. So hopefully that makes sense. Okay. Kiwi. Sorry, mate. Did you want to have a look around the grounds or anything here?
I am doing that at the moment, mate.
Okay, great.
Continue on, and when you're finished, I'll just quickly whip around the grounds and we'll go.
All right, grand. Okay. The Kiwi Swiss was the next one, wasn't it?
Did you guys just question without notice, those of you in the room, did you take the dollar Swissy trade last week? Was it last Wednesday or Thursday? I can't remember. And if so, what are you doing with it now? Sorry, mate. There you go.
No problem. No problem. Okay, so Kiwi Swiss is still very, very messy in the price action down here. And again, there's a really clean trend line here. And because of the clean trend line, then really I'd want to know whether it looks okay. That bounce point doesn't look too bad, so maybe creating the channel. I'd want it through here if I'm going to trade this long. The short is still in play, and actually it's not a bad area for a short. It's not the worst place in the world for a short. We can see that there's still a break of this area here. Looks like we're getting the bar to the downside. Kiwi Swiss short would be my play on this one, and I'd want to probably look back for those lows again.
Mate, fundamentally, you'd have to be short as well, wouldn't you, at this point?
I think so, mate. Yeah, and do you know what? It's interesting you say that, really, for me, because I quite like the way, we were just talking about the reason that the pound is such a dog, and I think some of the reason is because of the lack of confidence in the UK economy. And when I look at Switzerland, I think they're handling it fairly well, from a lot of the news that I'm.
Look at that! Yum.
Yeah, it looks good, doesn't it?
It does,
Yeah.
but not for a short.
Not for a short.
No.
Okay. Well,
If that candle was to close,
yeah,
where it is now,
yeah.
okay. There's another thing that I'm going to throw at you. If the current candle closes as is in 15 minutes, I'm in. That's a buying opportunity for me, and that's completely against my bias. There you go.
Okay, so Jeff will be looking for a buying opportunity. However, I'm sure he would change his mind if, and this might be a nice clear image, because what we do actually have here is a 15-minute chart that's the price that's moving to the upside. I'm sure he'd change his mind if it broke through this level down here.
Yeah.
So if it breaks through that level, that is probably the area to look for the short. You know, if you've got
and I guess it's dangerous when I say things like that, but I did put a caveat on that. The candle has to close as it is,
yes,
not extended.
Yes,
because
still got 15 minutes.
Both you and I change our views, based on what price action does in 5 minutes, much less.
Absolutely right. Yeah, absolutely right. We can't do anything until we see until we see what we need to see. So if this closes down here, I'd say Kiwi closing below 0.5545 and returning. That would probably be the price to try and get in to the downside, and I think it probably would have a pretty decent, and that would start looking like a bit of a bear flag as well on the 4-hour chart.
Mm-hmm.
So that would be my particular play. I wouldn't go long personally because it's just not my strategy. Jeff will potentially explain that in the 2-minute brief if this bar shapes up the way he wants. But otherwise, I'd be waiting for a break of that low, and I'd be looking for a short in that.
To be frank, right now it's in no man's land, which is why there are two cases. There's a case for the long, there's a case for the short.
Yes, yeah. So you just want the picture to become a bit clearer.
Absolutely, you need this to clarify itself.
Okay, so Aussie CAD is the other one. Tell you what, we get to these last couple, and then I better do the
fly,
actually. Yeah, I've got to fly. But let's do these last couple and see what we got going on. Before we do that, look at Bitcoin. There's Bitcoin. Still looks pretty ugly.
Yeah, I wish I bought that at 20,000.
Yeah, I know somebody who did.
Oh no, really?
Yeah.
Oh, I hope they got out quick.
Terrible advice taken. Well, they got out, but not quick. This is the Aussie CADs. God, these are really bad. These are bad charts at the minute. I mean, you got to be looking for the shorts, but let's have a look. Oh, I mean, it looks very similar actually. It's quite similar, isn't it, to the Swissy, Kiwi Swiss? Yeah, I'd be looking at a short in this one as well. So that means Jeff may well find an opportunity to go long, but let's just double check.
Look, you'll be stunned actually when I tell you what I'm thinking on Aussie CAD.
Yeah,
I'm absolutely bound on fundamentals on this one, and the reason is all around. Aussie's now on a level playing field, I believe, where it's been on a handicap for the longest time, and that's why it's fallen away and away and away and away. But now I think it's on a level playing field because of the ferocity and terrible situation that we found ourselves in with coronavirus.
Yeah.
Because I think the world is now level.
Yeah, and it does make it a bit tricky, doesn't it?
The economies of the world are now, in my opinion, in exactly the same position all over. And where are we coming out of this? You guys were mentioning steel before. If we're talking about steel, then you're talking about iron ore. Yes. And if you're talking about iron ore, you're talking about Australia. And the resources that we have in Australia for iron ore, uranium, copper, you name it, coal, everything you make steel out of is Australia all over. And at some stage, the Aussie dollar will rally, and it will rally substantially. Coronavirus, I think, has brought the playing field right down to level. and I think the Aussie can rally. When? Yeah, great question. Really good question. No idea.
Yeah.
But that is my medium to longer term forecast, that will happen. Trading it, oh, good luck. Really good luck. Oil, CAD, other commodities, Aussie. That's why this is so tough to call.
Yeah. Yeah, I totally agree with that. Actually, I think that certainly the price action would suggest downside. It is a bit of a problem because if we are talking about steel, then we would, the Aussie would be our currency play on that, and we're looking at oil being pretty poor, and really selling the CAD would be the answer on that as well. But while this holds up, it looks okay. But if it breaks down, then there is an argument to be made for a price action short in that. Yes, the 2-minute brief is this. There you go, Kumar. Oh no, sorry, that's the wrong one. That's the. I will post it in now again. Sorry, that was the wrong post. There you go. This is what you want. That's for the 2-minute. Oh no, that is right, is it?
I don't know, mate. I've got no idea.
Posting the same thing.
I'm a passion. I must sort that out, so I've got a link to that, so I can take the pressure off you.
That's all right, mate. That's all right. I just got to figure out what's going on here. I'm not the most tech savvy person, as you know, Jeff.
No, you're about 14 megabytes ahead of me, though.
Is that a lot?
Make that terabytes.
All right, I'm going to post one more time. If this is the same link, then it is the same link. I think that's right, actually. I think that's right. Somebody might have to tell me on that. Okay, so that would be that's the Aussie CAD. Actually, Alexis is Aussie CAD for you, Jeff, by the looks of things. Right, I think that's it for me. So let me pass it to you, mate. I might have to shoot a little bit.
You fly
earlier, but let me pass it to you. All right. Well, shall I fly now or shall I wait? And let's wait to the top of the hour. Doesn't matter. I'll stick around, and if it's still going, I might have to shoot then. But I'd like to hear your thoughts on some of these as well.
All right. No, I won't be going longer than that because I've got to fly as well. But let's take a look and see if I can bring some sort of logic to a weird and wonderful world that we're living in right now. Logic, mind you, does not always coincide with what the markets are thinking. But here's what I'm thinking. Let's talk about the euro first up, and we'll go to we won't. We'll go to the weekly chart first on the euro. And if you've been listening to me for the longest time or any amount of time, you would have heard me talking about this descending channel. Why? Because it just keeps being honored. That's why. And no matter how often we go to it, we bounce off it, we come back to it, we bounce off it, we break it, we come back into it, we break it again. And guess what I'm thinking right now? I'm thinking right now that we're at the bottom of that channel. And if we get back inside it, my immediate thoughts are we're going back where? To the top of the bloody thing. When? No idea. Absolutely no idea. But if we do come back inside, and this is exactly what we've been talking about through the whole show, if you've got a double bottom, doesn't mean you trade it. Wait until you've got the second signal that this is going in the opposite direction. And that second signal for me will come on probably not the weekly time frame, but it may, and it will be a higher low. And as soon as I see that, after we've come back in here, I mean, look at that. There's a beautiful tweezer bottom sitting here. Am I going to trade that? No, because it's just a candle pattern. That's all it is. It is in a good spot. I've got to say that. It's at a strong support level, but I've got to see it come back inside here and maybe hit a resistance level, bounce off the resistance level, find a support level. Am I nominating this as a level to trade from? Why not? Sounds like a good idea, but it's got to get back into here first. Then give me the higher low off the double bottom, then I've got a reason to trade. So right now, that 4-letter word is exactly what I'm waiting for. Double bottom, back inside that range, give me a higher low, happy days, away we go. Dollar yen, as I said, if I'm trading this from bottom to top and top to bottom, guess where we are? And the four-letter word, WAIT. As soon as we break here, if we break here and come back inside and produce a lower high in this case, away we go. We put a short in the market. Are we going to have to wait for some time to take our profit? Well, to get our real return, yes. But if we take profit on the way, then that's the way to go. If we can actually see a pattern forming or a trend, then you can probably scale into this as well. You can make a whole truckload of money if you're willing to look at the market structure and actually trade it. Very clear to me what I have to do here. I have to wait until, and the best way for me to play this is to not preempt the resistance acting as resistance, but to wait till it happens. So WAIT, again, let it hit there or not. It doesn't have to hit there. Now I've got this as close as it probably can be. What I need is a support or resistance level to be broken. So this, the monthly pivot sitting here, if that were broken and were retested, then I don't have to wait for this. I've got to go now because the support's been broken. It's very, very much a formula. We're very near the top. Am I pip perfect on the top? Probably not. It's a bit of a cloud of a price, really. It could be here, you know, it could be through these highs. So I'm not saying that's the absolute level, but we're very close to it. If we come off it and produce a lower high, that's the time to go. So, you know, I'm not giving you any trades right now, but I'm giving you a formula, in my opinion, to trade. Cable is extremely interesting, and I've got to go to the bigger time frame here to show you why. I absolutely love this scenario where we take out a maximum long-term level and take out all the lows, every single low that's sitting for the past however many years. And the reason for that is one of two things is going to happen here. It's going to fall out of the sky, or that level is going to be respected, and we will get back to that level and we'll go to the next resistance level, which is here. What's really happening here is one of two things. The price is absolutely breaking down. The pound is absolutely breaking down. There is no return for the longest time if that's going to be the case. Or there's a whole lot of money being made off the bottom of this. If you consider that these people who are long, not sure there'd be too many of them to be fair, their stop losses are here somewhere and they've just been gotten rid of. If there's people short here, they're going to get short as the break of the new low, and they now come into play. So no matter what, there's a lot of sell orders here, no matter what. So if they're gobbled up by the people who actually want to take this to a higher position, there's no better opportunity than right now to do that. So you could see this go very, very quickly. Not saying it's going to happen, I'm saying it's possible. So I like to see this, but again, I'll be waiting for back into here, higher low, then go. I won't be just saying, okay, this is the ideal opportunity, let's go, because it's not. It's a gamble, it's a speculation thing. Aussie, interesting on the Aussie, and I've told you about the Aussie. I think we're now on a level playing field, and at some stage we will see the Aussie rally. This is exactly the same as the pound. It's now taken out every level of support that's underneath it. We haven't been down here for the longest time, and there's a strong level that we're at right now, support and resistance that you can see. I'm tipping that at some stage, don't know when that is, this will rally. If you're talking commodity prices going up, other side of coronavirus and the rebuilding of the world's economies, then I think the Aussie will benefit from that at some stage. Do I just go long here? Of course not. You've got to wait for a sign, and the signs aren't there right now. Dollar CAD, it depends a whole lot on a fundamental shift in terms of oil and in terms of safe currencies. and we're talking about the dollar. The dollar is the strongest thing on the board right now, has been for the longest time. And that must change. Why? Because things change. They don't go up forever. It's as simple as that. When? Don't know. Have I got an idea on this one? Yes. As soon as oil rallies, dollar CAD will crash. That's my opinion. But you've got to correlate the two. I think as soon as you find oil bottoming, and the speculation we spoke about earlier, maybe that's $19, maybe it's $15, maybe it's $12. I don't know. No idea. But as soon as you see that turnaround based on what? Double bottom, higher low, head and shoulders, or sorry, inverted head and shoulders, higher low, those sorts of things. As soon as you see the technical signs, then in my humble opinion, dollar CAD is back to 137-ish at some stage. Dollar Swissy, as I said, I hope you guys got into this last week. We put you into this. This was one of those sneaky little ones that I leaked from the 2-minute brief. And it was based on, Ash will remember this one from a long time ago. It's called, in my parlance, a double cross. Yeah. And we put you into that one last week. Hope you're into that. And I said, what are you doing with it if you are in it? Well, you're at a resistance level, so take some profit. That's my advice. But don't get out just yet, but take something off the table. This will retrace and probably retrace down to the monthly pivot or thereabouts. But I think it's got some more left in it and maybe go up to 101, maybe 102. And I think that's where your all take profit level is on dollar Swissy. And it's based on that range right there. I can't see it going through that right now, but I can't see it not getting there at the moment. Things change very quickly. I'm going to go very quickly through the rest because I don't have too much interest in them, to be fair. Kiwis. Exactly,
I will shoot, mate, just because it's 9 o'clock. I better get cracking. But
away you go, bud.
Yeah, back same time tomorrow. Same day time. Central Channel 5 to 8.
5 to 8. Okay, I've got nothing more. That's a date. Don't be late. Have a good one, guys.
Yes. See you later, buddy.
My goodness, I'll have to check my wounds. I've never been cut that short for a long time.
Oh no, you can carry on, mate. But I've got to go.
I'm done, mate. You've got to close it anyway, so we'll go.
Okay. All right. We'll be back tomorrow, guys. Sorry about shooting off a little bit before we finished our piece, but I've got to go and prepare for a course that I'm giving later on, and I'm sure Jeff's got things to do too. As of you guys, thank you very much, John. Back tomorrow, and we will do it all again.
Bye-bye for now.